feels like we're sort of in that 2750, 2800 level. We've bounced off the 2813 4 times, and it's always been resistance. And we'll see. It's hard to know that we've got much more gas in the tank unless and until we find out about China trade and Brexit. And both those things we'll find out about, but it's just not going to be this month. So as we look at the drivers for the market, yes, we know that the government's reopened. We know the Fed has pivoted 180 degrees. We certainly know that earnings were better than feared. But we don't know the results of those two things, and I think that's important. So I think that's what keeps us from entering the stratosphere right now.
Yeah, I feel like we are convening a meeting of the Debbie Downers here. Steve, I know that you've been bearish for a while. Is it more than just kept in a range, in your view? Is there actual downside?
It's funny. I was about to say you could probably speak for me, Melissa, on this. I don't think, first of all, big fan of Art, so always love being on with him. I think he's a consummate professional in the industry, so always love sharing the screen with him. I don't think there's any real catalyst or things to get excited about other than the market moving up. So if I asked you what data points are we looking at, what would you tell me? I mean, the NFIB is at a December 2016 low. It's the lowest reading since then. You had a non-farm payroll that really was a terrible payroll number to look at. And all the things that bounced, Melissa, were just bouncing because the government close ended. So I'm not really sure.
I'll play your reindeer game, Steve, in terms of what I can throw at the markets. I mean, things could be less bad. Europe could be less bad because we get a China trade deal, and that in turn helps Europe. China could be less bad because the stimulus that the Chinese have started, about 5 months ago or so, can actually kick in because it usually takes 6 months.
Right. Well, China's stimulus never goes away. So it's been going on longer than 5 months. It's over 60 in quantities. You and I had that discussion the other night on Fast Money Desk. But the European stuff being less bad, we're just starting to get a whiff of how bad it really is. Look at all the stimulus they've thrown at their marketplace in the last 4 or 5 years. What has it done? The indices are at the exact same spot. Germany, Italy, France, Japan, all of those economies are either on the brink of recession or in recession. So I think people are starting to realize that the panacea that global easing and fiscal stimulus used to supply is not going to be the cure this time around.